Investing can often feel overwhelming and confusing, but here's the thing. You don't need to be a Wall Street genius, have a finance degree, or a huge amount of money to get started. Today, I'm going to walk you through exactly how to invest as a beginner in 2025 so that you can start building wealth with confidence, even if you've never invested before. Let's get started. To buy stocks, you'll first need a brokerage account, which you can set up in about 15 minutes. To open a brokerage account in the US, start by choosing a reputable broker that fits your needs, such as Fidelity, Charles Schwab, Vanguard, E-Trade, or Robinhood. Go to their website and fill out the online application, providing your legal name, date of birth, social security number, address, employment details, and investing goals. Select your account type. Most beginners choose a standard taxable brokerage account, while retirement investors might open a Roth or traditional IRA. You'll then verify your identity with a government-issued ID, link your bank account, and transfer funds. Then, once you've added money to the account, you can search for and purchase stocks, ETFs, or mutual funds directly through the broker's platform. After opening and funding your account, you can buy stocks through the broker's website in a matter of minutes. As a beginner in 2025, the easiest and safest way to start is with low-cost index funds or exchange-traded funds, also known as ETFs. Think of them like baskets of hundreds of different companies, so even if one company has a bad year, your entire investment doesn't crash. The S&P 500 index, which tracks the 500 largest companies in the United States, has returned an average of about 10% annually over the last 50 years. Of course, some years will be higher and others lower, but historically, staying invested and riding out the dips has been one of the most reliable wealth-building strategies. This year, you're going to hear a lot about artificial intelligence stocks, cryptocurrency, and other hot trends. While some of these may have a place in your portfolio, they should never be your starting point. Putting all your money into one hyped asset is like betting your entire paycheck on one spin of the roulette wheel. A better strategy is to build a stable foundation first with broad, diversified investments. Once you've done that, you can use a small percentage, maybe 5% of your portfolio, to experiment with higher risk opportunities. That way, if those bets pay off, great. If they don't, your long-term plan stays intact. Common mistakes to avoid when investing include trying to time the market by buying and selling based on emotions, which often leads to poor decisions. Many beginners overlook the impact of fees and account costs, which can quietly eat into your returns over time. Finally, not having a clear long-term plan can cause you to lose focus and make impulsive choices that hurt your investment goals. The hardest part about investing is often staying consistent. That's why automation is your best friend. Most investing platforms in 2025 allow you to set up automatic monthly contributions. You could decide that on the 31st of every month, $50 or $100 automatically moves from your checking account into your investment account. This way, you don't have to think about it, you don't skip a month, and your investments keep growing quietly in the background while you focus on living your life. One of the biggest myths is that you need a lot of money to invest. The truth is, time in the market beats timing the market. If you invest just $100 a month starting right now and earn that same 7% annual return, in 10 years, you'll have around $17,000. That's just from setting aside the cost of a few takeout meals each month. If you wait 5 years to start, you'd only have about $8,000 after the same 10 years of contributions. The difference? Nearly $9,000 lost. Not because you didn't invest more money, but because you lost the power of compounding. This is why starting today matters more than starting perfectly. Let's face it, leaving your money in a savings account today earns you around 4% if you're lucky, but inflation is hovering near 3%. That means if you put $1,000 in the bank today, next year it will only have about the same buying power as $970. That slow leak might not seem like much in 1 year, but over 10 years, that same $1,000 will feel like it's worth only around $700 in today's terms. Investing flips that equation. If you can earn an average of 7% a year through smart, diversified investments, that same $1,000 could grow to nearly $2,000 in a decade. And that's without adding a single extra penny. This is not about gambling in the stock market or chasing the next hot trend. It's about creating a plan that works for you, with real examples, clear math, and strategies that have stood the test of time, but updated for the realities of this year. So here's the bottom line. Start now, start small, and stay consistent. Investing in 2025 doesn't have to be complicated or intimidating. The sooner you get your money working for you, the sooner you can stop worrying about every economic headline and start building the life you want. If you found this video helpful, make sure to hit that like button, subscribe for more investing tips, and share this with a friend who needs to start investing today.